I'm Sakina Spruell Cole. I am a business journalist by trade, former business editor at Black Enterprise Magazine, personal finance journalist, writing personal finance for Ebony, Essence, started the BET.com show, Keeping It Rich with Sakina, back in 2012. And has since written for a variety of publications. Was a producer on the CNBC show, the Susie Orman show. I was a producer for her, for various segments. And this is Munch the dog. But the reason why I'm giving you all these credentials is because I realize there are so many people out here now on the internet. I feel like I've been sleeping or something, and I woke up, and all of a sudden, everybody's an expert on the internet, without any experience, without any credentials. They're just telling you, do this, do that. And by the way, subscribe or pay me money and join my club. So I'm not asking you to join my club or to send me any money, right? And I never have. I used to do the Black Enterprise Wealth for Life seminar, and we had Declaration of Financial Empowerment. We had 10 principles. I actually updated the principles back in like 2003, probably 20 years ago. And they're a great set of principles on what you need to do in order to build your wealth. And then I created the 5 keys to keeping it rich in 2003 after I completed my studies at the Columbia Journalism School and the Columbia Business School. And so I created the 5 keys to keeping it rich because I want to close the wealth gap. The wealth gap is severe right now in 2023, according to the latest reports. Black households' wealth ranges somewhere around 24,000, and the household net worth for white households ranges around 189,000. So you see the gap is about 160,000. And one of the main reasons why is because as African Americans, we don't have as many assets. We don't have as many stocks and bond accounts. Our home ownership rates are also lower than the majority home ownership rates. So for instance, with the Black Enterprise Wealth for Life stats, the number one thing we would tell people to do is use home ownership to increase your wealth. The first key to keeping it rich, I defined, is to define your rich, right? Define what wealthy looks like for you. Because what I realize is otherwise you're just going to go out here buying houses, buying stock accounts, buying retirement accounts, and you don't even know what you're saving toward or what you're actually buying it for. You buy a house you don't want to live in, you get stuck in there for 10, 15 years, you're miserable. So I don't want you to just go and buy a house for the sake of building your portfolio. That's why we started with the 5 keys to keeping it rich. So again, the first key to keeping it rich is define your rich. The second key to keeping it rich is invest in your rich. And the third key to keeping it rich is for you to build your credit, because in America, you can't do anything without credit. No matter how much wealth you have, at some point you are going to need to utilize a credit line. The fourth key to keeping it rich is to own, because you must own something. You have to own a home, own a business. And the fifth key to keeping it rich is to hire. And that's very important. That's where it comes in when you think about hiring financial advisors, estate managers, people to create your will, and then also people to babysit your children or to clean your house so that you can actually spend your time actually building your wealth and managing your portfolio. And now when I talk about managing your portfolio, let's talk about that for a minute, because when you manage it, it means you're overseeing it. You're making sure that it's getting you where you want to go. You make sure you're reaching the goals you want to set. Managing your portfolio does not mean you have to become a stockbroker. I am finding a lot of people are paying thousands of dollars to people to teach them how to day trade, how to actually trade their own portfolios. Warren Buffett is not managing his own portfolio. He is not watching his own stock charts daily and making an individual decision all by himself as to what stocks to buy and sell. So think about that when people are telling you if you want to be super wealthy or you want to be super rich, that you need to learn how to, invest your stocks yourself, that you actually need to know how to read charts. I mean, there are some basic performance charts. I tell people you can just set up a fake account. It's not really a fake account, but you set up say a Yahoo Finance account, account to watch. It's a watch account, right, with a watch list, and you can set some alerts on it. So if you want to buy a stock, any stock, I'm not going to name one, but any stock that you like, something you eat, some places you go, whatever, and just watch that, for a couple of months. You can do that for free. You can set that up just at Yahoo or Morningstar for free, a watch list. Or if you have an investment account already with Merrill Lynch or Fidelity, for instance, you can set these up within the app with the actual account, or TD Ameritrade. I know a lot of people have. You can set these watch lists up yourself for free and just watch and see how the stocks are moving. But if you really want to invest in stocks, and you really need to in order for us to really close the wealth gap, if you're African American and you really want to close the wealth gap, you do need to invest in stocks and bonds and mutual funds. But you don't need to know how the market fluctuates. First of all, no one can time the market. No one can ever learn enough to know how the market is going to fluctuate. So you need to hire, right? The fifth key to keeping it rich. You need to hire an investment advisor. You need to hire a money manager or financial advisor, certified financial planner. What you need to find out when you're looking for a planner is he Series 7's licensed, he or she Series 7's licensed. My financial advisor actually is a she, and she does have her Series 7. The Series 7's license means that they can actually buy and sell stocks. So you can call them and you can say, hey, I really want to invest in this. And they can, give you their feedback as to whether they think it's a good idea. And they can actually make that trade for you that day. So you want someone who can do that. If you're just Series 6, then you can possibly just buy and sell life insurance policies. A lot of people start off with that, and they start off with life insurance policies and telling you to invest in those, which is another product. And I'm not going to say whether that's, better or worse. It's a safer guarantee for sure. When you die, there will be a face value that will be paid out to your beneficiaries. But if you're looking for money right now, um, you know, an investment account is the way to go over a life insurance policy. And I worked for Susie Orman for some time, and I absolutely love her and adore her. Check her out. Susie Orman has some great advice and is very practical. And her thing is life insurance is for life insurance. It's not for investing per se. Um, you make that decision for yourself after you sit down with your own financial advisor, after you do that fifth key to keeping it rich, which is to hire a financial advisor who will actually manage your portfolio for you. If you have a couple $1,000s, you can walk right into a branch at your bank and ask them, can you invest this in mutual funds or stocks? And they should have an advisor, their financial advisor, who can sit down and talk to you. All they're going to charge you is about 0.5% to 0.9% commission. It's less than 1% commission on your portfolio, which means as your portfolio goes up, their commission goes up. So it's in their best interest to make sure that your portfolio goes up. You understand? So there's no need to pay someone a flat rate of money just for them to teach you how to read a stock chart, how to watch a watch list. There's no need to pay someone to do that. So you can watch their videos with them telling you what they did in their portfolio. I mean, I guess that's nice and everything, but you can just actually hire your own financial advisor, which is the fifth key to keeping it rich. Hire your own financial advisor. So if you take nothing else away from this video today, please take away that you should hire. The fifth key to keeping it rich is to hire. You can check me out over at keepingitrich.net, where it has some more stuff about the 5 keys to keeping it rich for free. You can, follow the page, do all that good stuff that people do. And let's keep in touch. And, until then, let's keep keeping it rich. Thank you. Bye-bye.